Okay, it's going to be Arifa, founder and CEO of Himalaya Labs. She will be doing her presentation, and followed by Leonard, CEO of Blockex. And then we have a panel that will be moderated by Pınar Emirdağ. Thank you. The stage is yours. Thank you.
Hi, good afternoon, everybody. I'm really pleased to be in Istanbul. It's my first time I'm giving a talk on blockchain here. Otherwise, I love Turkey. So today, let's talk about the future of blockchain. If you have any questions and what you want me to focus on, you can let me know beforehand. But otherwise, I'm going to start from the history of Bitcoin. And as you know, Bitcoin as a concept is not from 2008, but it started way back in the 1970s when a bunch of people like Wei Dai, Hal Finney, Nick Szabo, and some others came up with the concept of BitGold and B-Money and smart property contract titles. So if you look at some of the talks in Cornell University and so on in the United States, way back in the 1990s, they were talking about computer science and computing technology coming to be viewed as the future of law. And by law, I mean the normal law enforcement we have, the law that is administered in the courts and jurisdictions. So the smart contracts as a concept, they're not new. They have been around since the 1990s at least, and probably much before that. But it has taken a few decades for it to come to mainstream, and I don't think it is still in the form where we can use that in the society. But we currently have the infrastructure for us to apply these concepts, which have been worked on for several decades, and bring it to the mainstream. And my effort has been to evangelize this concept around the world and say, don't just look at Bitcoin as a cryptocurrency, don't just look at Ethereum as an infrastructure or a platform to create a few basic smart contracts. Look at it as a paradigm shift. Look at it as the next generation infrastructure to change the way we view things, to re-architect the way we have been doing things. And the main concept behind the wave of cryptocurrencies is decentralization. So if you look at blockchain, you can view it as a few things. One is you can look at it as a next upgrade of digitization. So if you've been keeping electronic records, blockchain is the next step towards digitization. Or you can look at it as a time stamping mechanism where record keeping is immutable and it's duplicated so that you have the integrity of the data. And the ultimate concept is decentralization, where you have substituted a centralized intermediary who you entrust your data with a decentralized infrastructure where thousands and millions of nodes and miners are keeping the same data. And there is no one vulnerability source. So therefore, your data is secure. And also, there is no one centralized party exercising control, either in the decision-making process or in the consensus mechanism or what have you. So wherever there is centralization, it can be argued that it's a security hole. So that's mainly because there is conflicts of interest, and centralization eventually makes you want to seek rents, which is what has been happening in the banking and financial institutions for several centuries. If you look at all the industries, every industry you have the top 10 and top 20 players changing each decade or every few years. But in the banking and financial system, you don't see any names changing. The top 20 players are the same, even the next century and so on, which is reminiscent of no change, no innovation, no disruption. So let's change things. I get carried away with my talk. So we are going to create a decentralized capital markets platform. Of course, it's very ambitious and challenging, but this is the next wave of disruption we ought to be thinking about. And we call it DGCamp, for Decentralized Global Capital Markets Platform. And the reason we chose the capital markets is, if you look at all the ICOs, they have all been focused on a few really low-hanging fruit kind of industries. And Putting it in perspective, first came Bitcoin, which is currently valued at about $40 billion. And Bitcoin is nothing but an alternative to the fiat currency. And $40 billion you compare to the USD in circulation, which is $1.5 trillion. And the entire physical money, which is all other currencies put together, is $30 trillion. But you look at stock markets, which is at the current estimate somewhere around $85 trillion. So you look at all the current crop of ICOs, they are nothing but extensions of the use cases that were illustrated in Vitalik Buterin's white paper of Ethereum. And barring some real innovations like colored coins and so on, which came before Ethereum, all the other innovations were just extensions of features of Bitcoin. And now, of course, after Ethereum, innovation has progressed, but again, they're focusing on some really common grounds, and no one's really going after new industries. So all cryptocurrencies put together, $150 billion, but the real world industry, like capital markets, is $85 trillion. Here it says 67. So if you disrupt something like that with the next generation technology like blockchain, it can be really a game changer. So here is an analysis of all the ICOs which have been going after industries like media and social, gambling and so on, which don't really deliver world-changing impact. Okay, it might be a more fun way of gambling, it might be a more fun social network and stuff, but real world-changing impact is going to come when you disrupt transactions like financial instruments, financial cash flows, financial smart contracts, because the whole world uses these. So smart contracts are such a phenomenal invention that can be applied to any sort of a business logic or business agreement. So why are we not doing it in capital markets? So if you look at it ideologically, the global capital flows are very inefficient, and that's because we have different countries, and each country has its own history. We have heterogeneous developments of financial markets. We have differential access to credits. The borrowing is not equally easy across the countries, and you have different regulations and the rates of return on capital and so on. So even if the countries have same productivity of its companies, the return that the investors get is not the same. So there is a very well-researched paradox called an allocation paradox, where countries with the highest productive companies are not getting the net cash inflows or net investment inflows like some other countries. And this has been chronicled by researchers. And the problem specifically is in investment banking industry, where if you take the whole world, every single entrepreneur who has ever become successful, there is only one way for him to be successful. At some point, he accesses the public markets and he gets capital, which is far in excess of what the company can support through organic revenues. And he deploys that capital for the company's growth, and company takes advantage and grows and becomes successful. So every single company, no matter how inventive, disruptive, successful, talented, gifted, has to follow the same path, whether it's Mark Zuckerberg or Sergey Brin or Elon Musk and so on. And every time they do that, they have to give away 10% of the fees to an investment bank. And that's because investment banks have been sitting there, they are an oligopolistic industry, they're rent-seeking, there is a tacit collusion between investment banks, and you don't have a choice as to the fees you pay. So every time you raise capital, you pay them 10% fees. And here are the league tables. So the top 10 investment banks alone make $100 billion in fees every single year. This is the league tables for 2017. And this fees is just fee income. This is not fee made by lending their balance sheet, so not risking their capital, but just the fee they make on advising on IPOs and bonds and so on. Please keep a watch on my time. So investment banks are not seen as the fair participants in the economy. They are just a source of value leakage from the innovators and wealth creators. And actually, they are at the center of this whole ecosystem. Well, you know, if intermediaries are at the center of the ecosystem and not the wealth creator, you know that there is something wrong. And for the first time in history, we have this elegant technology called blockchain, where we can put the wealth creator at the center, where all intermediaries can be sent to the periphery. You can still have them, and you can optionally have them supply some products to you, like due diligence reports and regulation reports and so on, but they are no longer the core part of the transaction, and therefore it doesn't become necessary for you to pay the fees just to do this transaction, because you can do the transaction on your own. And this is made possible by smart contracts. So, this is an attempt to take on the Wolf of Wall Street, and if you've been listening to talks by banks and financial institutions like Jamie Dimon and so on. So Jamie Dimon was the first to recognize the threat of Silicon Valley. And today he is saying Bitcoin is fraud and blockchain is fraud and so on. And that's because they're slowly waking up to the potential that no matter what they do by forming grand alliances and private consortiums and permissioned ledgers and so on, some people who are really inspired by Satoshi's agenda of decentralization will wake up, and they'll wake up to the future, which is irreversible. So, if once you adopt smart contracts into real-life industries, where you get rid of the intermediary and you have a direct interaction between the counterparties like investors and issuers and so on, the trend is not going to go back. This is a natural evolution of human civilization. So this is just the next step in our technological evolution. So one of the main things that internet gave us was matchmaking. So it enabled us to discover counterparties which met, the coincidence of wants. So if you add blockchain to that, blockchain also trust minimizes this exchange of value. So wherever there's exchange of value between intermediaries, which was already enabled by the internet, by all these great institutions like the Amazon, eBay, Etsy, Uber, Airbnb, all these were platforms that came about from the internet. If you add blockchain's one prime characteristic of trust minimization, of value exchange, then that means you are able to do all these platforms without the centralized intermediary, just in a peer-to-peer protocol. Of course, I don't need to tell you why disintermediate. Okay. So we want to propose something called an initial scrip offering. And the main difference between the ICOs, which is an initial coin offering, and the initial scrip offering is the ICOs stay away from securities. The ICOs are giving tokens. So as you know, over $2 billion have been raised just this year alone in 2017 on blockchain-related concepts. So these companies have something to do with blockchain. And these tokens do not give any representations to securities or anything, any share in the company or so on. Whereas we want to give it the name of initial scrip offering, where you actually get a representation in the company in the form of dividends or equity. These are real. We are encroaching the real territory of securities. This will be very much regulated, and that means this whole ICO or blockchain innovation will open up to the whole world, for pharmaceutical industry, for automotive industry, for all sorts of traditional industries. That means blockchain will enter the mainstream of every single industry, because every single industry will be accessing capital markets. They'll go and do bond issues, they will do IPOs. So instead of doing IPOs, because ICOs is a much easier way of accessing capital, and this year has already proved that the VCs have been disrupted, and both the innovators and the investors have embraced this. So similarly, if you open this up to the whole world, then suddenly the capital raising becomes global, trustless, borderless, and disintermediated. So that's one of the ultimate ideals that you can hope for. Okay, sure. Okay, so what does this do? If you have a smart contract platform which can enable companies to do capital raising, then it means you get rid of the investment bank, you get rid of even the exchange, because this smart contract platform itself is the exchange where you can list your scripts. So the corporates and the investors directly come together, and so that means we become an electronic investment bank, and we become an electronic exchange, we become a Kickstarter, we become an online peer-to-peer lending platform, and replace any platform which brings equity or debt or loans and add peer-to-peer protocol to it. So any platform that currently does this, this smart contract platform can do. So it's really potent and powerful. And what are the benefits? Of course, you don't pay the IPO fees of 7 to 10%. You get rid of intermediaries, so there's no conflicts of interest. You directly control the communication channels between you and the investors, and you can determine the issue price. And all sorts of problems of centralization you can do away with. Plus, there'll be efficient capital flows, because suddenly this is global and borderless. And there is decentralization of innovation, because entrepreneurs from anywhere, regardless of whether they're in Silicon Valley or Cambodia or Istanbul, they can access investors equally, and they don't have to go to Ivy League schools and stuff, so there is more merit and the process is more fair. And this can become a foundation layer for app marketplaces like asset management industry. And just like there is an Apple App Store and Google App Store, there can be a lot of decentralized applications on top of this infrastructure, which can make this a very sophisticated platform. Okay, so I'm just hurrying up in the interest of time. So later, in a few months' time, we are going to launch our ICO, and the coin is going to be called Capital Coin. And this is the first ever time somebody has attempted to disrupt the securities industry with a blockchain solution and with a smart contracts platform. So I believe the potential is enormous. And in fact, I think this is one of the landmark innovations after Bitcoin and Ethereum, because Bitcoin was trust minimization of cash for the first time. Ethereum was trust minimization of contracts for the first time. And this is going to be trust minimization of capital for the first time. So if you apply the same concept to financial smart contracts, then the world is going to be a different and new place that we can all hope to see. So there's the end of my presentation. Thank you.
So we will have Adam Leonard from Blockex now, and we will then go to questions. It's really, really inspiring. Thank you.
Do you want to let me know when we get
I absolutely will.
Close?
Yeah, I will do that.
Adam Leonard, I'm CEO and co-founder of Blockex. Blockex is a digital asset exchange platform built to handle the entire life cycle of a blockchain-based digital asset. So that's origination, initial offering, second market, redemption, can all be handled by the platform. So what is a digital asset? A digital asset can be a Bitcoin or an Ethereum. It can be an ICO, but it could also be a bond. It could be an equity. It could be trade finance, syndicated loan. So some of the use cases that we've identified that we will be going after is ETFs, ICOs, insurance contracts, trade finance, bonds, which we'll actually talk a little bit more about in a second, and reassurance. So what is Blockex? What have we built to date and what we want to build in the future? So at the very core is an exchange. It's a very traditional exchange. If sort of NASDAQ or London Stock Exchange rebuilt its matching engine, they'd build it the same way. But we built it to handle blockchain-based assets. So the pre- and post-trade is where we use blockchain. We use it to create a financial asset, and we use it to service the financial asset. So the asset servicing in the next ring there, that's the third biggest ring. And then probably the more exciting piece of technology that we've built is the digital asset creation tool. That digital asset creation tool makes it easy for anyone who wants to issue or originate a financial asset using blockchain without having to interact with the actual blockchain. So right now, today, you can come on the platform and create a bond. Now, it's a traditional cash bond. We're in the FCA sandbox in the UK for that. By the end of the year, we'll be a regulated entity for that piece of technology. Things that are not regulated, things like ICOs and app tokens and cryptocurrencies are not regulated, so this is just, the sandbox is just for the bonds. Later on in the year, we'll start on the syndicated loan build and put out an announcement around trade finance. So we've partnered with a very large EDI company. They supply the invoice and bill lading for 22 of the world's largest supply chains. We'll supply them the blockchain layer. That will give a blockchain-based trade finance marketplace into 22 of the world's largest supply chains. The last little bit is distribution. So the exchange itself, we're new, so we don't have a lot of liquidity. So what we've done is we built a brokerage platform that we license to existing retail brokers. It looks like their own exchange, but it's really just pulling liquidity into a central exchange. So the digital asset creation tool, there's a lot of technology in there that makes it work. So there's a templating engine. So we take legal documentation from a law firm in the UK called Winston Strawn. It's an American law firm, but they have locations around the world. And we've templated their legal documentation. From that template, we've created a term sheet, and this is what the user interacts with. They fill out the term sheet. The term sheet then populates the legal documentation. Law firm signs it. This is all done online, no paper moves around. It comes back to us, and then we create the smart contract, automatically create the smart contract, as well as some functionality in an automation layer, because you really can't put everything into a smart contract. So these two things together create a self-servicing asset. So now you can do a large issue bond at a small unit face value with a monthly coupon, if you like, because the whole process then becomes automated. And another little handy bit of it is, since it's all on one platform and distributed out through our brokerage network, a borrower, a company, will know who owns its debt. Right now, if you do that in the traditional way, you would have to get a third party to find out who currently owns your debt. If you need to, say, tell them there's a new issue coming, or maybe you're going to miss a coupon payment. But now that can all be done through one platform. Ooh. This is just a snapshot of the brokerage platform. We have a potential customer somewhere in here, so it's more for them. It has a bunch of features. It's almost a business in itself. Leverage trading, social trading. This is a version that we would license to our customers. The version that we use is a very stripped down, very plain version. But it is HFT capable. We don't see a need for HFT in Bitcoin trading or any of the assets on our platform. But we wanted to be able to hit those metrics, because there are always times, 3-4 times a year, where trading price of Bitcoin goes through the roof or falls through the floor, and most exchanges fall. Most exchanges fail during that time. So we wanted to make sure that we could handle the peaks that happens often in Bitcoin. So some of the problems with the traditional financial markets and how we use blockchain to solve that, is around clearing, long clearing times, the lack of transparency, especially in the bond market, expensive to service an asset, and unclear stakeholder management, some of the legacy Bitcoin exchanges also have some issues that we've tried to solve as well. And that's mainly around compliance, KYC issues, and infrastructure that wasn't really built to handle the volumes that they get. Now, when you move to a blockchain-based system, some of the advantages that you get within the capital markets are a reduction in costs. So we've been able to realize a reduction in the cost of creating a bond by 75%. This is a combination of streamlining the processes, templating the legal documentation so the law firm knows what's coming to them. They can approve a bond very, very quickly. And then, of course, you remove a lot of the intermediaries. Also, we can bring you to market in literally 24 hours. We have the first bonds going on live on our platform already have the investors. So if you already have the investors and you're bringing a broad deal, this asset could be originated, approved by the lawyer, put on the platform, and actually have the entire cycle done within 24 hours. So now the investors have, within 24 hours, they will get their blockchain-based bond. It's just a token. They can trade it 24 hours a day, 7 days a week on a secondary market, and the issuer, of course, gets their money quite quickly. Benefits for traders, I touched on it a little bit as well. For the institutional trader, they get a 24-hour a day, 7-day-a-week marketplace. They get access to a different type of asset, theoretically more yield, which there's very little right now in the marketplace. And for retail traders, now they're getting access to assets that they didn't have before. On the settlement side, the way that our platform works is the trade happens traditionally on the matching engine, and then the settlement kicks in. That's the blockchain part. Even though the trade isn't the settlement, like some companies do, because we do have the redundancy of a traditional infrastructure, we are able to do settlement in as little as 30 seconds. So we are doing an ICO. It's more to showcase the technology that we have and the product offering we will offer to other companies that are looking to launch an ICO. Oops. I should probably do, yeah. So before we actually allowed ICOs to happen on the platform, we looked at what the risks were. You know, what were the risks to our potential customers in terms of reputation? What did the regulators have to say about this activity? Because until recently, there wasn't a lot of information being put out by the regulators. So what we identified was a few things. You know, one of the lack of KYC with some of the early ICOs, companies raising too much money too quickly. That creates a risk for investors. Lack of governance, inability to use fiat currency to buy into an ICO, and price volatility of the underlying asset, say Ethereum or Bitcoin. So let's say you have a very compliant ICO and you do put milestones in. Now, what happens if the price of Ethereum goes in half by the time you hit the milestone? Now your business is at risk, the investor's at risk. So we've solved for all of these issues. Oops. So the first thing that we did is we looked at the way that an ICO is allocated. You know, in the traditional world, you have a pot system. Everyone that is interested in going into an initial offering, they say, okay, I'll put in $100. You know, they put up their money. The next person says, okay, I'll put up $100. And if it gets oversubscribed by, say, 10%, everyone is scaled back 10%. They get their fees back, or they get their investment back, 10% of it. And then they get 90% of what they wanted. This provides a really fair way for all types of investors to buy into a pre-ICO. You don't need to have a relationship with the company to get the best deal. You can be, you know, not one of the cool kids, or you could be an institution and be able to get access to the pre-ICO. We do this with a smart contract. We have an internal token that we call an IDAX. That internal token allows you to use, say, fiat currency, say a pound, to buy into an Ethereum-based contract. So what we do is we peg the fiat currency to the IDAX, the value, and that IDAX is now the fuel for the smart contract. So you don't have to, if you're an investor holding, say, Bitcoin, convert your Bitcoin into Ethereum and then buy into the smart contract, into the Ethereum-based smart contract. Now, if you're the ICO, you don't have to collect Ethereum. You could say, I want to raise 100 million euros. And people can use Bitcoin, Ethereum, whatever the platform supports to buy into your ICO. That puts a cash transaction on the blockchain that allows people to use whatever they're most comfortable with to invest into these ICOs. Because we're regulated, everyone is fully KYC'd. That gets rid of some of the risk for both the company and the investors. It also does it poses a little bit of you know, it's an impediment because not everyone wants to do KYC, but because we're in the FCA sandbox, we have to. So that's the IDAX. How are we doing for time?
We have like 5 minutes.
Okay. So I'll just talk a little bit about our team. So when we started this out, it was just a bunch of blockchain enthusiasts. There's 36 of us now. That includes people from the capital markets. James in the middle, he was the MD of Nomura before he came over to us. Mizuho, Commerce Bank, all on credit trading. We have 5 people from that have a very heavy capital markets background. We have a COO that's going to start in a few weeks. He's coming over from Bain Capital in the US. So we have a very balanced team between blockchain enthusiasts, developers, and capital market experts. We're based in London. We have a dev team in Bulgaria, we have a small team in New York. We have one person out in Israel. We have 5 people out in Tel Aviv. And we have 2 people in Kazakhstan. Some of our advisors, this is the ICO advisor list. We have advisors across the spectrum. And that's Blockex.
Thank you.
Okay.
Appreciate it. So based on the performance of this audience, actually, I'm not even sure if I can ask any interesting questions, because I think I should leave it to you. But just one question to each one of you. What is, it sounds like you're actually approaching similar problems from maybe slightly different angles, but very, very similar. I will ask both of you, what's the biggest challenge for you to make this work? Who do you, and that's one question, and it might be different, and who do you need to have on the table to make it successful? Like which kind of organization, what kind of support? That's like in terms of making sure that you get them for success. So 2 questions. What is the biggest challenge?
Okay, you want me to? Okay.
Sure.
I think the biggest problem here is there are still some technological challenges that are unsolved for a pure decentralized exchange platform. So currently there are quite a few exchanges. Most of them are crypto exchanges. None of them are securities exchanges, but there are still problems like manipulation by exchanges, front running by miners, then latency of trades, ability to cancel the trade on chain. These kind of problems still remain. So it's at a protocol level right now. And also at some point, if you have to be able to compete with the Visas and the Nasdaqs of nanosecond kind of throughput and transaction per second speed, because of the inherent redundancy and duplication built in the blockchains, we are not able to compete on speed. Right now, it does not matter, because if you are a company and you want to issue shares, you don't care if the shares are issued in 10 minutes or 24 hours or even a week. But at some point, if you want to have it as a secondary trading exchange, where you have high frequency trading and a lot of sophisticated algorithms and stuff like that, then you are in no position to compete with the current exchanges. So currently, the protocols are in conceptual design, but they have not been executed and tested and so on. So it'll still take time. But this is a bold move. And a giant leap forwards in technology. And I don't believe there is any particular institution we need to have on board, because this is a radical re-architecture of how things work. So if you bring on a big institution, it's only going to curtail the philosophy. In fact, one stock exchange just contacted me yesterday, desperately, "Oh, our CEO wants to meet you." And I want to ask them what is the agenda, because we are naive technologists, right? So we'll go and blurt out what we want to do. So of course they can't buy you out, but there are all these exchanges wanting to suddenly meet me and have a talk. But there's no benefit they're going to bring. If anything, they're only going to either curtail you or delay the development, or it's definitely a hampering of the thing.
So it sounds like you need market structure, development of market structure, and support of community. So
it's definitely the support of the crypto community. That's all we need. We don't need big institutions at all.
Cool. How about you, Adam?
Well, because we interface with cash, we need banking partners. So there was an article in the Financial Times the other day around how UK companies aren't able to bank in the UK. So they're very happy to invest in UK-based blockchain companies, but they won't give them bank accounts, and that is an issue. So we are lucky enough to have several banking partners, but none of them are in the UK. So for there to be sort of a meld between the old and the new world, where you have cash interfacing with blockchain-based assets, you need the banks to be on board, and that would be a real key to this, to get a global banking clearer. And we're talking to a couple. Right now, we patch that together with the various different banks. And the other is regulation. You have a set of products that are completely unregulated, and then you have a set of products that are completely regulated. So, and then you have regulators around the world playing catch-up, trying to figure out how they're going to regulate, or if they are going to regulate. That's something that needs to catch up with the technology.
Sure. Okay, that makes sense. And by the way, banking issue has been going on for a while.
Yeah.
So, questions from the audience? Any? You were very vocal in the morning. I expect that kind of participation. Okay, so in that case, I need to think about second question. All right. So I was listening to your presentation, Arifa, and I was wondering, like, what is really next for you? Like, because how do you? It's very ambitious, right? I mean, there's ICO, and it sounds like from a, you will have some money, but like, how do you who do you go to? How do you pull this off? What are you doing day to day?
Yeah. It's so the first moral boost I received was from Nick Szabo himself.
Okay.
At Shanghai. I met him a few weeks ago in September, and he said, "This is a cool idea, and we are not working on conflicting things, so possibly we might collaborate." So that's all the moral boost I need, not from exchanges and Wall Street. I have been talking to a few private investors. So in fact, if we get some pre-ICO funding, we want to actually get on to building the platform, because it's a complicated architecture we need to build. So we need to build an investment bank and an exchange, which is an automated and decentralized, which is extremely complex. So we want to get started on working on the platform before we even do the ICO. Because if you do the ICO, that means you are committing to a protocol design and architecture and so on, and things are so dynamic in this world. Tomorrow there is a new protocol design and stuff. So we want to be up to date, and we want to keep researching on the latest in decentralized exchange and stuff. So we want to get started with building of the platform ASAP with the minimal funding we have. And of course, the big hurdle will be from the regulators and the incumbent world, the Wall Street, and they are not going to like this at all, because this is the first time somebody is telling them you have no role to play in the new blockchain world. Because all this while we have been going around saying, let's work with banks, and this is a neat complementary stuff that works synergistically with you and so on, nice warm things to listen to. This is the very first time someone is saying, hey,
let's build it all.
Yeah.
Okay.
So it's complex, but wherever I have gone, people are enthusiastic in drones, and a lot of youngsters, 20-year-olds, graduates from colleges. And one of them actually told me, hey, let's not even wait for the funding, I'll just take leave and we get started on working. So developers from all over the world are getting together. So I'm looking forward to getting down with them in the cave and starting to code all this.
Okay, so what you do need to probably get, as you think about all of that, the people who, I see almost like pillars of different areas where you have, pillars of asset management and what asset managers do today, let's say. You need to have some of the people from asset management potentially who should help you architect the future on your platform, right?
Yeah, but they have, such ingrained resistance to this whole concept. Okay. They don't want to believe this is true. So we want to first go after the first problem. Our primary problem will be the primary issuance of securities. Okay. It's the first time you do an IPO and you issue shares. How do you do it on an automated platform? So we are going to solve that problem first, because that problem doesn't care about what is the transaction speed. It only cares about getting rid of the intermediaries. It only cares about issuers having direct access to investors. So it's just a two-sided marketplace. And we are going to worry about the secondary trading exchange, much, much later, because, that's not solving any real problem right now. It's a good to have, nice to have, and it's a natural extension of what we do. But the primary problem we want to solve is the primary issuance of securities, which will suddenly open up the market for a lot of small and medium enterprises around the world, which are probably not qualifying to go to any exchange and do an IPO. And they're not probably falling under the regulation of equity crowdfunding and so on. So it's for those companies, just like ICOs. ICOs have opened up the market for everybody with an idea. So we want to do this across all industries and around the world. So let the market decide whose idea has merit, and if you want to put some capital at them.
Sure. Any similarities there? Anything that resonates with you specifically in that?
Well, it's almost as if their success makes what we're doing redundant a little bit.
Okay.
We're doing sort of the first version of what you would like to do. So a lot of people talk about what we're working on as a potential to be an automated investment bank. Once there's enough investors in the ecosystem, you don't need an investment bank.
Yeah.
You have access to it.
Okay. You did talk about syndicated loans and use cases like that.
Yeah.
I'm using the phrase use case, unbelievable, because I'm really against that. Anyway, so why syndicated loans? Why that path? Do you have specific people around the table?
Yeah, well, we do. We have some people that from that background, and it came out of a project that we were trying to do with the guys out of New York, Symbiote, who did the JV with Credit Suisse and I think Ipros. And we learned a lot from that process. The syndicated loan process, the settlement times are enormous. The risks are there. The unwinding of it, if it doesn't come together, the settlement time, the fact that they send billions of faxes a year to manage a syndicated loan, that there are still people in banks that have a job where they're supposed to organize the fax that comes in, and people on one side of the building are faxing people on the other side of the building. So it's naturally ready to be disrupted. And the platform itself, all we need to do in order to turn a new asset on is understand what is the legal documentation that's needed and create a couple more interfaces. So syndicated loan and trade finance, which are the two next pushes, they're very similar in the way that they're going to function.
Any questions?
Yeah, I want to. I want to really talk to you. So please ask.
Yeah. Yes, please.
With the IPOs that you're doing, I mean, one of the justifications for the 6%, 7% fee, whatever it is, which I completely agree is far too high, is the fact they're underwriting the issue. So how would you be going about underwriting and committing capital to an issue?
So underwriting, so far, there is no hard underwriting by banks. So what they do is they go to the market, build an order book. So they receive the demand from each of the investors, and they aggregate the indicative demand, and they determine the issue price. They come back to the issuer and say, hey, this is the indicative issue price. Then they go and announce to the same investors and say, hey, investors, now put in the money. So at no point are they underwriting on their balance sheet saying, if there are no investors, we are going to subscribe to the issue. So it's at best a best efforts basis, or at best a soft underwriting, where the risk is for a few hours, like less than 24 hours sometimes, and that also based on indications already given by the investment bank, by the investors. And given their long track record of dealing with a lot of these issuance processes, they already know which investors are to be trusted and so on. So they're not actually underwriting, but they do serve some other purpose, doing due diligence and studying regulation and this and that, which they can still do, not as a core of the process, but as an auxiliary part of the process.
Any other questions?
Won't you be another intermediary? So you are eliminating the intermediaries, but in the end, you are going to be the intermediary.
Yes. If you call Uber an intermediary, yes, it is an intermediary, but a centralized one. But if something has to replace an existing infrastructure, the best you can imagine is technology replacing it. So yes, we will be an intermediary, but it's a technology platform which will be the intermediary. And of course, it will be a decentralized platform, which is the best you can think of right now. Or you have to think of, trusting God or the clouds and stuff, which is not theoretically possible.
Maybe not your vision, but at some point, payment of something, like exchange of something, your point, right? So how, I mean, that's, it's almost like syndicated loans actually inspired me to ask this question. Because that's actually an interesting problem.
Yep.
But most of the problem is around the process
Yeah.
of the loans. But there needs to be a payment somewhere.
Yeah.
So what's the way to break that?
The way to break that is governments issuing digital currencies,
All right,
essentially.
okay.
That kind of thing is a long way off. Some governments are starting to do it, but not the governments
And
we need
issuing
to be doing
digital currencies on smart contracts, so
Yeah,
that the value is exchanged only when security is exchanged. So you cut out the settlement network, you cut out the custodian. There is no payment channel. So all of these things get replaced by one single thing, which is a smart contract. But of course, there is a compromise and a trade-off in the sense you can't do leverage trading. So you can't have the liquidity that you had earlier of margin calls and so on, where you did trading for a lot more money than you put in. That cannot take place because now a smart contract restricts you to trade only to the capital that you have or the collateral that you have already put. So that's a limitation of the current system. But of course, there are always trade-offs between security and efficiency and leverage. And with leverage, of course, there are concomitant risks. Where the financial system, gets into derivatives and they don't understand what risks they're dealing in and stuff. So in a way, it's more secure. If you don't let leverage trading happen on smart contracts, it's more secure than the current financial system.
But there is nothing that would stop leverage trading happening on smart contracts.
Yes, you can have a system which says, okay, we will create a system for leverage trading on smart contracts.
Yeah.
But then you know what you're doing. So, but currently, the smart contracts, as we envisage them, you cannot let leverage trading happen on them.
Okay. I'm looking at the audience again. I mean, I can talk about this forever,
Yes.
but I don't want to. So.
Sorry?
I'm thinking about regulations. Are there any regulations stopping you, or the other way around? Do you need any regulations so you can thrive?
So, I see this ultimately as, okay, why are there regulations today? Regulations are there because each country has borders around it, and each financial system is within the national silos, and we don't trust, some other countries' borders. And so the moment you go beyond our borders, we have to pay the intermediaries outside our borders, and that's why it's costly and that's why it's expensive. So the moment such a platform becomes functional, it's global and borderless, unless some regulator says you can't touch our investors, or our issuers can't do this. Just like China has said our ICOs are not legal. They can go and set up ICOs elsewhere because we cannot stop US from having ICOs or Turkey from having ICOs, but ICOs are banned in China. But there are enough friendly regulations on earth. For example, Delaware state in USA has already made all this legal, whatever I'm talking about. They've already passed a law saying you can do this. So some corporations like Daimler Chrysler, for example, they've already issued bonds for $100 million on a blockchain platform. So there are companies as well as regulators who already see this as the future. But then if each company were to create its own ICO platform to do bond issuance or whatever, it's inefficient because they have to get their own investors, they have to create their own platform, and they have to they have to reinvent the wheel every single time. So if there is a single marketplace where every company comes, then there is an investor base that the subsequent issuers can benefit from. So that's the benefit of the internet, right? So because Uber already has drivers as well as consumers, the next time you go, you don't have to think, oh, which driver is going to come, because drivers are already there. So investors will already be there. So regulation, we will find the easy low-hanging fruit first, the friendliest regulation first, and we will have license there, and we will start operating with whatever license you need to operate as an investment bank. Only we will not be an investment bank, we will be an automated or an electronic investment bank and an exchange. And eventually, I see the world progressing towards this borderless thing, just like ICOs, where everybody is issuing securities without bothering about permission by anyone.
I have one very quick question with very quick answer. Where do you each do your ICOs? I'm just curious.
We do ours in the UK, in Gibraltar, so far, yeah.
Yeah.
How about you?
Well, we'll have a very complex web of companies everywhere. So, UK, Singapore, Switzerland, maybe Gibraltar as well. So
interesting. All right.
Yeah.
There's one question. Sorry.
Well, I think we are talking about disintermediation of the processes, as well as the regulating, the governance, and when it comes to blockchain and distributed ledger. But I'm also a bit stuck with generating new products. I mean, I like the idea of ICO, but it has some resemblance to IPO, right? We derive the name even from the IPO because the process is a bit similar.
It's really just a voucher. It's just a voucher.
But the thing is, for example, there is an ETF based on Bitcoin, but we still cannot, come up with a new product based on the tokens or coins. So, I mean, put aside the governance, as well as the process, discussion. What are your views in terms of the new products based on this new paradigm?
Are you talking to me?
Both of you.
Okay. So I think decentralized exchange is the best, product one can come up with. So already a lot of attempts have been made. So to perfect that decentralized exchange is the best product, no one thought about. So it's the ultimate smart contract, and also popularizing this term and bringing it to the mainstream. Financial smart contracts, bonds, loans, equities, or derivatives, futures, all these things. If you convert them into cash flows, cash outflows and cash inflows, and you trust minimize them, saying you don't need to trust an intermediary for the performance of these cash flows in these financial instruments, but you trust minimize them, the same way we trust minimize Bitcoin payment or smart contract implementation. Then, the whole ecosystem and the architecture, there'll be millions of intermediaries which will be going out of business. So I don't see, anything more disruptive than this. So why do you have to create, a gadget or something? This is going to change the world. So you don't need to come up with a gadget like an iPhone, which does things, when a simple thing like this can force a lot of institutions to rethink and reassemble, and they have to find new ways of adding value. Plus, one more thing I forgot to mention was the artificial intelligence. So an automated platform is naturally amenable to artificial intelligence, where whatever investment bank did, the AI can match issuers and investors way better, and it can foresee suitable matches, suitable opportunities, everything way better. So this is all futuristic.
New financial products. I mean, I'm not a financial engineer, so I wouldn't be the best person in our company to answer that. But we are on Monday. We have the former global head of derivatives for RBC coming in to show us his new product and ask us if we would like to onboard it. So if we exchange cards, I can tell you on Tuesday.
Yeah, I mean, I guess there is a bit of an irony there, though.
Yeah.
New financial products might have been also not necessarily always best for the society.
Yeah, and I think that's exactly it. Yeah. So, in looking at mortgage-backed securities in 2008, maybe you don't want new products. Maybe you want direct access to, if you're a chief investment officer of an insurance company, maybe you want direct access to a mortgage or a cluster of mortgages on a product, on a platform where you could just pick out the mortgages that you want. And it's not a new creative product. It's a much simpler product, but with less risk.
Thank you. Thanks a lot. Really, really inspiring. By the way, I especially like the fierce girl, the Wall Street one, which is, it's cool. All right. Thanks a lot. Thank you.